Do's and don'ts of loaning money to loved ones. Loaning cash to loved ones requires cautious preparation. It can be a token of generosity when somebody you know is in a difficult situation financially. However, it tends to be risky if your endeavors to assist lead to conflicts or with you encountering financial issues also. As indicated by a 2022 study by creditcards.com, 42% of respondents studied said they had lost cash through loaning money to people they know. In the event that you've been asked by someone you know for a loan, remember these do's and don'ts. Key focus points. Loaning cash to loved ones can prompt financial issues for yourself and possibly cause relationship issues. Limiting the amount of money loaned to loved ones can assist with safeguarding connections and limit the potential for issues. Co-signing on a debt for loved ones as opposed to loaning them cash outright can likewise be hazardous. Prior to loaning money to loved ones, consider what it could mean for your own financial well-being. Loaning money can cause tax implications for both the borrower and the lender. Loans to family members, when are they okay? There are circumstances in which a family member could ask you for a loan. For instance, they may ask for a loan because they need cash rapidly to cover an unexpected financial event. Need to boost their credit history to qualify for another loan. Did not meet the income requirements for a customary loan because of sickness or employment cutback of family member. While you might feel an obligation to offer a loan, it's essential to consider whether it's a good idea for yourself as well as your financial circumstance. For example, in the event that loaning money to somebody would overburden your own funds and make it hard to pay your own bills, it's most likely not the most ideal move. Then again, in the event that you have a sizable amount of cash in savings, no debt, and you're getting a consistent paycheck, making a loan probably won't be as hard to manage. Along with the financial ramifications, it's critical to contemplate how likely you will get paid back for making the loan. If the family member who's requesting a loan is mindful about taking care of their bills and encountering a one-time financial emergency, being repaid probably won't be a problem. If, by chance, you're asked by somebody with a background marked by being financially irresponsible, you could be facing a greater challenge by loaning them money. Take a look at your financial situation to determine how much money you can comfortably lend. The do's for lending to family members. Only make loans to people you trust. In the event that you're loaning cash with the assumption that you'll get it back, it's critical to be specific about to whom you loan money to. Restricting loans to family members you trust to take care of what they owe can assist you with staying away from financial and stress pains later. In a recent study, for instance, in excess of 33% of borrowers and lenders revealed terrible outcomes, including hurtful feelings and resentment. In the event that you feel discomfort loaning cash to somebody, then it's alright to say so. You might get some pushback, yet it's critical that you're loaning money when you're sure that it won't make the relationship go down the drain. Consider asking the individual to whom you're loaning money for some sort of guarantee equal to the loan amount that you can hold as security until the loan is paid back. Limit loans to what your budget can withstand. Making a significant loan to help somebody out is an impractical notion in the event that it puts restrictions on your own funds. While choosing the amount to loan to somebody, an effective method for outlining it is to consider the money a gift. At the end of the day, how much money might you at any point lose without it harming you financially? This doesn't mean you ought to expect you will not be repaid. All things considered, it assists you with defining practical limits for loaning money to loved ones, that way you don't wind up in that situation of requiring a loan yourself later. Get the loan in writing. While making loans to people you know, having documentation can assist you with keeping away from misunderstandings. Drawing up a loan agreement that you and the borrower consent to and sign clarifies what your obligations are, and it gives you reason for legal response if you wind up in court to sue them later to get your money back. At least, your loan agreement ought to include your name and the borrower's name, the date the loan was made, how much money being loaned, minimum monthly payment, payment due date, interest rate, assuming you're charging interest, consequences for defaulting on the loan. For larger loans, it may be wise to have a lawyer draw up an agreement for you. You may need to speak with a tax professional in the event that you intend to charge interest on the loan. In the event that you intend to charge interest, it should be at the very least rate as per applicable federal rates, AFR Rulings. For loans higher than $10,000, interest is viewed as taxable income. Even if you don't charge interest, you might still need to report the money as a gift in the event that it isn't repaid. Assuming you decide to gift cash to loved ones as opposed to loaning it, you can surrender to $16,000 per individual yearly in 2022, expanded to $17,000 for 2023, without setting off the gift charge. The don'ts for loaning money to family members. Try not to loan beyond what you can afford. This ought to be self-evident, however, it's worth saying again. Loaning more cash than you can reasonably manage can prompt issues on the off chance that the individual to whom you loaned the money doesn't repay it timely, or you have a harder time keeping up with your own expenses as a result. Try not to allow guilt to drive your decision. You shouldn't allow guilt to compel you to loan money to somebody you know. On the off chance that you feel obliged to loan money to somebody when it doesn't make sense for you financially, it's worth taking a step back to consider other alternatives to help them. For instance, you might be able to point them toward different resources that could offer financial help, aside from a loan. Cosigning makes both of you lawfully liable for the debt. If the other individual defaults on payments, the bank could come after you for payment. Try not to loan somebody your credit. You could propose to co-sign a personal loan for a friend or family member instead of loaning them the cash yourself, or you could allow them to utilize your credit card when absolutely necessary. This way you're not giving over any cash out of pocket. Co-signing on a loan, nonetheless, can affect your credit score, as the inquiry, payment history, and loan balance will appear on your credit report. Furthermore, on the off chance that another person is utilizing your MasterCard to make purchases, you're liable for any purchases they make on the credit card. These are choices you may need to consider if all else fails. Might I at any point loan cash to a relative and charge interest? You can loan money and charge interest, given that the interest cost falls inside the legal guidelines. Most states have usury regulations that limit the greatest amount of interest that a lender can charge. Moreover, you ought to consider the applicable funds rate prescribed by the Internal Revenue Service, IRS. Interest rates lower than this amount might be viewed as a gift and can cause a taxable event. Is loaning money to family taxable? Intra-family loans can be taxable for both the borrower and the lender. Assuming that the value of the loan is more than $10,000, any interest payments might be viewed as taxable income to the lender. What's more, in the event that the lender forgives a part of the loan or accepts a below-market interest rate, this might be viewed as a gift to the borrower, causing a gift tax. For what reason would it be advisable to never loan money to family members? Loaning money can harm relationships with your family members and friends, particularly assuming they could experience difficulty paying it back. This emotional turmoil can frequently feel more terrible than losing cash. It's wise to try not to blend money with family, however, assuming you actually feel a sense of urgency to loan them money, be ready for the likelihood that you will not get it back. The conclusion. It's a fine line between assisting a friend or family member who might be struggling financially and risking your relationship. On the one hand, you could have funds on hand close by to help a relative that needs cash. Then again, loaning funds to anybody, particularly somebody who is financially struggling, seriously jeopardizes your own financial stability. While pondering the best game plan, consider the reasons above to choose whether or not to loan money to individuals in your sphere.